Warren Buffett, the Oracle of Omaha.
Warren Buffett's holding company, Berkshire Hathaway. The company amassed a record level of cash.
$325 billion in cash. That's the most they've ever had.
Cash, let's talk about it. $325 billion. It's the largest cash pile that any company, any public company in history has ever had. What do you think the plan is behind that? Why do you think he's doing it?
Warren Buffett is sitting on a boatload of cash right now. If Warren Buffett's sitting on so much cash, does that mean that he thinks stocks are going to come lower and he wants a good buying opportunity?
You may have seen the headlines lately of Warren Buffett selling his stocks and going into cash. Does he know something we don't about the stock market? Is he hoarding this cash in preparation for some doomsday market crash? Or is he just being prudent with his portfolio? Let's get into it. Today, we're going to look at several different items. Now, this isn't a video to predict where the stock market's going to go in the short term. This is really looking at prudent investing. Should you be doing the same as Warren Buffett with your portfolio in retirement? And are there any lessons that we can learn from Warren Buffett? Perhaps Buffett does have concerns about the markets right now. There could be geopolitical risk, or he thinks things are just too expensive. The only problem with this is Buffett himself said he can't time the market and he doesn't know where the market's going to be going.
When we're looking at markets at such high levels, it has a lot of doubters and a lot of people saying, wait, it's too late for me to get in. I've missed it. Now I have to wait for the pullback. What would you say to someone like that?
Well, I would say they don't know, and I don't know. And if there's a game that's very good to be in for the rest of your life, the idea to stay out of it because you think you know when to enter it is a terrible mistake. I don't know anybody that can time markets over the years.
Buffett also stressed that he's certainly not the one that can time the market. And again, he's one of the best investors in the world.
We haven't the faintest idea what the stock market is going to do when it opens on Monday. Charlie and I don't think we've ever made a decision thinking we should buy or sell based on what the market is going to do or on what the economy is going to do. We don't know.
Several factors likely went into why Buffett is holding a large hoard of cash right now.
You're sitting on $168 billion of cash. His questions are, one, what is Buffett waiting for? And two, why not at least deploy some of it?
Well, I think that's pretty easy to answer. We only swing at pitches we like.
In the securities business, you literally every day have thousands of the major American corporations offered to you, and you don't have to make any decisions. You have to make, nothing is forced upon you. So there are no called strikes in the business. The pitcher just stands there and throws balls at you, and you can sit there and watch thousands of pitches, and finally you get one right there where you want it, something that you understand, and then you swing. And
so you might not swing for 6 months.
You might not swing for 2 years.
Buffett said it himself. He wants to swing at pitches that he likes. And when you have over $325 billion, you can't just buy anything. You have to buy something that's large enough because Berkshire Hathaway is such a big company to begin with. This is actually an advantage that you have over Berkshire Hathaway as an investor. Just so you can get an idea of how much $325 billion is, it could buy these companies.
What you see here is a list of companies that most people are familiar with and the value of those companies. He could buy any one of these companies with that cash or a combination of them.
Some of the other reasons why he may be holding on to such large piles of cash right now. Berkshire Hathaway is also an insurance company. Insurance companies have to have several $billion in cash reserves in case there is some sort of disaster where the insurance companies need to pay out. As an investor, you don't have to hold cash on the sidelines in case someone else's house burns down. That's another advantage you have over Berkshire Hathaway. Something you may not be familiar with. In 2003 and 2004, Buffett did something very similar where he started raising a lot of cash.
If you watched Warren Buffett raise cash and decide to follow him in 2003, you would have potentially missed out on a huge return. The S&P 500 had a total return of just over 80%. Would you have had the patience and discipline to watch the market go higher for 4 years? While you were on the sidelines? The second issue most would have faced is when to put that cash back to work and actually buy into the market once there was the downturn. This just shows the potential opportunity cost of sitting in cash and trying to time the market or follow billionaires and how they manage their investments.
So we know that Buffett can't time the market, and he really doesn't have the same advantages you have as an investor. Did you know that Berkshire Hathaway doesn't pay a dividend? Another huge difference between you and Berkshire Hathaway is Berkshire Hathaway doesn't need to generate income. Berkshire Hathaway has different goals than what your retirement portfolio would have. So one thing you'll notice is Berkshire Hathaway doesn't actually pay a dividend out. so they can hold on to this and they don't need to be reliant on redemptions. Now, if you want to learn a little bit more about dividend investing and some of the misconceptions there are out there, check out this video here. You need your retirement portfolio to sustain you through your retirement. In your portfolio, we need to generate income by a combination of dividends and selling shares. So what do we do as a strategy to make sure that if there is a downturn, your retirement income is protected? We use the 3-bucket retirement strategy. It's a method of organizing retirement savings into 3 categories based on when the money will be required. The short-term bucket contains easily accessible cash that you can take on a monthly basis that won't fluctuate with the overall stock market. The medium-term bucket holds moderate risk investments with a time horizon between 3 to 5 years. The long-term bucket, of course, is where we're trying to target a higher return. Now, this one will go up and down with the markets, but over time, it will likely outperform the other 2 buckets. The average duration of a bear market for the S&P 500 is approximately 289 days, or about 9.6 months. With the short-term bucket, what we do is we set aside 1 to 3 years of your retirement income or planned expenses on the sidelines. And really that way, if there is a market downturn, isn't going down with the overall market. Now, if there's years where the long-term bucket outperforms, what we would do is we'd reinvest that back into that short-term bucket. So what's the takeaway from this? While it's always interesting to see what Warren Buffett's doing, it doesn't mean that that's what you should be replicating yourself. Focus on what your goals are and having it invested in a diversified portfolio. One thing to remember, you can be successful as an investor without copying billionaires or trying to time the market. This will give you a much higher probability of success, especially while you're drawing income from the portfolio. If you like this video, hit the like button or subscribe. I'm going to be releasing videos like this all the time. Take care for now. Hey there. Thanks again for watching this video. If you want to watch more videos like this, subscribe to our channel where we're going to be releasing new videos constantly with burning questions our clients have or what's happening in the world or educational. If you want to learn more about Rank & Rice Wealth Management and the services that we offer for our clients, go to our website. We'd love to set up a call and see if we can help you on your financial journey.